Hey, what's up, everyone? This is Silver Slayer. Thanks for tuning in and welcome. The stuff we're about to talk about, the conversations that we're about to have, are extremely insightful but also crucial as an investor, and not just an investor in the gold and silver. We're talking stock markets, cryptocurrency, even real estate. The next coming months are going to be critical. You have to be on your toes. You have to be able to make precise and rational decisions at the snap of a finger. So much could change so quickly, and you have to learn how to adjust and adapt. You cannot be stuck in your old ways. You have to learn how to become open-minded and how to adjust and actually look at both sides of the coin, pun intended, because things could definitely change. Gold markets are selling off, and that's because people think Trump is going to win. See, gold is a safe haven. So when people fear banks, don't trust governments, they invest in the gold because they want their money out of fiat. But if Trump wins, stronger economy, people don't need gold. And we're starting to see the effects of that. Now, whether Trump wins or not, you can kind of get a glimpse into the markets and how they're going to act. So what this video is going to show is some extremely important information that we have to use to our advantage to either set ourselves up to prepare for either or just to know that whatever happens is going to we'll be able to benefit from it. What I mean by that is whoever wins will know how the markets are going to react, so we're going to have to adjust our stack accordingly. So this video is going to explain a lot, not from a political standpoint. This is strictly from stacking. I'm trying to allow you guys to have the most profitable, most successful stacking strategy possible, regardless of the politics behind it. Because when you're investing, that stuff doesn't matter anyways. So, link to this article is in the description. Let's jump into it. Could it be deja vu all over again for the Democrats? In 2016, Hillary Clinton seemed to have a comfortable lead over Donald Trump in the U.S. presidential election polls, yet she lost out of the U.S. electoral college system. Might the same thing happen again and confine Joe Biden to obscurity rather than presidency? With both candidates in their 70s, this time around, the choice of potential vice president could be be the key here. Both VP choices could be considered to be a heartbeat away from presidency, and while the prospect of a President Pence is indeed worrying, in America's still racist and misogynistic society, a President Harris could be a complete no-no. With Joe Biden perceived to be the more frail of the two presidential candidates, the potential prospect of Kamala Harris becoming the nation's first black female president might be too much for the majority of Americans to contemplate should Biden not see out the full 4-year term if he is elected. His choice of running mate, despite appealing to an important sector of the electorate, could end up being a case of shooting himself in the foot. The past few days saw equity markets around the globe falling sharply, with Wall Street probably the biggest loser, although it did see a minor recovery yesterday. But contrary to expectations, ours included, precious metals also sold off sharply, while the dollar rose. See, dollar and precious metals are directly correlated, they're polar opposite. If the dollar index is higher, gold and silver is lower, and vice versa. Given that a Biden victory would be expected to trigger a bigger, massive economic stimulus package, which would almost certainly boost gold and equities in the short term, and that's because the bigger the stimulus package, the harder the dollar is going to get hit, the worse the dollar is going to be, or the weaker it will be, and that in return would boost gold and silver. Like I just said, they're directly correlated for polar opposite. So if Biden wins bigger stimulus package, gold and silver will definitely benefit. Driving the dollar down within a few notches, which Biden would do, the direction of the markets might be seen as a sharp warning for those banking on a Biden victory, as the polls and betting odds are currently predicting. So that's kind of what I was saying. You have to kind of have a plan. You have to have a strategy, whether Biden wins or whether Trump wins, on what you're going to do, what decisions you're going to make. You can't really make the same decision whoever, for both people. Unless you're just holding. I mean, if you're buying, selling, or trading, you really have to pay attention to these next, coming weeks and months. If you're just holding, it's still stuff that you need to be paying attention to, because it's extremely important just as a human or as an investor. But especially if you're doing one of the first three, buying, selling, or trading, you gotta be paying attention to this stuff. So this accompanied by poll figures suggesting that the likelihood of Biden prevailing in many of the key battleground states, which will likely ultimately decide the direction of the presidency, is at risk with the outcomes too close to call, and with a sector of American populace loath to admit the pollsters that they may, in reality, favor a Trump win despite some of his erratic decision-making and the overall findings that his policies are driving America in the wrong direction. The polls could yet be wrong again. Americans love a winner, and Trump has proved himself to be a winner in the past. So, what does all this mean for precious metals and equities? Now we're getting into some good stuff, right? Both Republicans and Democrats will implement huge stimulus packages to try to get America back on its economic growth feet, or at least mitigate the ongoing effects of this pandemic, where U.S. infections look likely to reach 100,000 a day by next week, and virus-related deaths are nearly over 1,000 a day. Wow, that's a crazy number. Jeez. So, I just want to stop right here for a second. This is where things can get tricky. This is where things can get dangerous. Yes, stimulus is a great thing to allow people that lost their jobs, businesses that have closed, to give some comfort, some security, financial security thrown their way. But we're talking about $1 trillion stimulus packages here. That's a lot of money that we do not have. We simply do not have that money. That's the problem. People don't care that we don't have the money. As long as they get a couple dollars in their pocket, they're happy. But where is the money going to come from? The money has to come from somewhere. That's the scary part. People aren't playing the tape all the way through. The ones that are, they realize the problem, and that's why they're a little worried about this. The dollar's going to get hit instantly, but the worst part is this pandemic has already exposed how broke America really is. $27 trillion in debt. Yeah, that's people. That's on U.S. debt collector. That's for everyone to see. But how broke we really are, though, the pandemic has exposed, and that's why you're finally seeing countries start to opt out of the U.S. dollar being the world's reserve currency, which is really dangerous. That's really dangerous. I mean, the USD is the world's reserve currency, and if people start to opt out of that, in the majority, that could be dangerous. That could be more dangerous for so many more reasons than just from a United States point of view. See what I'm saying? The dollar has nothing backing it. The dollar is literally worthless. So it's only worth as much as people think it is. And if people start to think it's not worth much, it literally is not worth much. And that's where the danger lies behind. So any such package will likely be too little too late. A Trump victory could probably see the virus figures continue to rise alarmingly if he continues to downplay its effects in an attempt to boost the economy. A Democrat victory would likely see bigger stimulus measures in monetary terms, but accompanied by tighter restrictions imposed. But these may be insufficient to slow the virus advance through the winter months. Either way, the U.S. faces enormous unemployment and a deepening recession. And when we're talking about a recession, or we're talking about stimulus packages, does that ring a bell? Do you get deja vu here? 2008, financial crisis, the credit crisis of 2008, which led to $50 silver 3 years later. 2008, credit crisis, recession/depression, billion-dollar stimulus packages. $50 silver 3 years later. Nowadays, recession/depression, trillion-dollar stimulus packages, and a global pandemic. Things are way more severe than they were back then. So if that led to $50 silver back then, imagine what it could lead silver today. $1 billion stimulus packages back then, $1 trillion stimulus packages today, and we have a global pandemic exposing the dollar, hurting, and a U.S. presidential election all in the same year. If you want to talk about crazy silver prices, ladies and gentlemen, we're living in crazy times. So what does that mean for investment options? We think gold will recover some of its luster and maybe drag silver up with it, although not to the extent predicted by many of the out-and-out precious metals bulls. Once the election is settled, prices will recover, but given the possibility of a Trump victory in the presidential stakes, but the Senate falling to the Democrats, nothing can be certain here. And that's the main thing we got to remember. Nothing can be certain here. What you think might happen might not happen, and you have to learn how to adjust on a dime. You have to be able to adapt, and you have to admit it. A lot of times when people have emotional attachment, in these markets, they, even if it's not what they like, that they're so passionate about what they think is right or what they think it should be, that they'll still invest from that perspective, and they'll lose a lot of money or make terrible decisions. You have to look at the markets realistically and say, okay, this isn't what I like, but this is what's happening, so I have to adjust accordingly. A Democratic clean sweep, as the polls and betting odds are currently predicting, would probably mean a surge in equities and in gold and silver prices. But we wouldn't expect any equity surge to be maintained, although a precious metal one might be. The prospect of a mandatory lockdown and tax rises to help pay for stimuli could well dent any further equity price progress. Gold and silver might move onwards and upwards, but slowly with occasional setbacks, while we remain cautious about PGMs, palladium in particular. This latter metal is hugely reliant on its industrial usage and automotive sector. If you guys remember about a year ago, palladium skyrocketed because of the catalytic converters. But anyways, this is promoting a rise in electrically powered automobiles at the expense of palladium-based internal combustion engine and exhaust control systems. Of course, the Trump victory would probably set back such potential measures, as his position on tax rises is far from clear. So, either way, we still see the gold price getting back to over $2,000, perhaps sooner than rather than later. And this is what I've seen a lot of people talking about lately. They're talking about short-term versus long-term. And most times when you see Citibank, Goldman Sachs, all these people that are throwing out price forecasts, they have two very different scenarios or very different figures. First one goes like this. They think that for the meantime, silver is going to stay low. It's going to stay low, probably mid-20s for a while, going into next year. And then later on next year, they see it going around $25, $30. And then you have the second group of people that still think the short term is low, but they say by next year it could be $50 to $100. Citibank said the same thing. See, I'm a little bit of a skeptic. I'm a little skeptical on that. I think what realistically would happen, if we are going to see $50 silver, it would be in a couple of years from now, just like the 2008 through 2011 situation, which led to $50 silver. And by the way, 2008 silver was like $9 or something. So it went from like $9 to $50 in 3 years. We had $11 silver in March. So it could be a couple years away, 2-3 years away. $50 silver could be here, and if it breaks through that, if it breaks through even $30, this it could skyrocket, especially with how much demand, the shortage happening. It could happen a lot quicker than it did back then. 3 years was back then where things were a lot different. Nowadays, apps like Robinhood, younger generations, dollar's weaker, $1 trillion stimulus packages, a presidential election. You have this driving silver demand from 5G technology, electric vehicles, solar panels, the green energy revolution. It could happen a lot quicker than 3 years. But to be realistic, I'm going to say 2 to 3 if you're trying to look at very large numbers. Now, realistically, I hope that it's a lot longer. I hope that doesn't happen in 2 to 3 years, because why would we want that? That means we only have 2 more years to accumulate silver before we have to throw the towel in and start selling. No. I want silver to stay low for another 10 years at least, so I can stack a lot of silver, and that can be a life-changing experience. Even if it doesn't rise that much, if you can accumulate that much gold and silver in 10 years, think about how much you could. Even with only investing a couple of dollars a month, you could still accumulate a lot, and that in return would give you huge returns. But 2 years from now, that's a very small dent in what you could. But I mean, unless you've already been stacking for 10, 15 years, then you're probably ready. Depending, if you're a new stacker and you only have 2 years, you better get on your A game and start. But I don't want to push people to start overbuying, because that is still a long way away. There's still a lot of time. It's not going to happen overnight. And anyone who's saying it is going to happen overnight, they're just pumping you, and they're misleading you, and it's not right. They're giving you a false misinterpretation of what the markets are going to be. But anyways, I hope that this video has helped. There's a lot of other stuff going on, like the Perth Mint silver bullion sales surge in 2020. Look at this chart. This was January to September 2019 versus January September 2020. Look at that, up 68%. And that's just Perth Mint. That's just the Perth Mint. There's also, and it even says right here, demand. Where is it? Where does it say? I was reading it a second ago. Along with global silver ETFs, see, demand for physical silver bullion along with global silver ETFs. It's not just Perth Mint. This is happening everywhere, and that means that things are going to get iffy, especially if the production cannot catch up, or if miners don't really start kicking it in gear with silver production. So anyways, I hope you enjoyed this video. I'm going to wrap this video up here. If you thought this video was educational, informational, or at least entertaining, make sure to smash the like button. The link to this article will be in the description. Put that in the comments. Let me know what you think about all this. Where do you think the price of silver is going to go? What do you think is going to happen if A or B wins candidate-wise? We really don't need to talk politics. This channel, it really isn't about politics whatsoever. If you guys are going to respond, I want you guys to come from an investor's perspective. I don't want to hear who you think should win or who shouldn't win. I don't want to hear any of your opinion about that. We're talking about investing here, right? We're talking about investing. Keep the opinions to the side, okay? So anyways, hope you enjoyed this video. This was Silver Slayer. Thanks for tuning in. I'll see you guys soon.